Well, let's kickstart the show then by connecting with Indifi. Their AUM has doubled on a year-on-year basis to about 1,500 crore rupees. Let's talk a little bit more about their growth projections as well as plans to list. Alok Mittal is the co-founder and MD of Indifi, now joining in on the show. Good to have you on board. Let's just talk about what really led to this growth, 100% growth to your AUM of about 1,500 crore rupees. What have been the drivers?
Avanne, thanks for having me here. The growth has largely been driven by the increasing demand for credit that we saw after the COVID period. During the COVID period and up to the second wave, which is around June, July of 2021, there was both subdued demand, but also stress in the market. And hence, players like us who wanted to go do unsecured credit were conservative. After that, we have seen an immense revival of MSME businesses, which is where there has been the confidence to extend more credit and grow rapidly to meet the demand that has come through.
And your total disbursement value as well is above 5,000 crore rupees and your AUM in excess of 2,000 crores. What are the projections that you have down the line?
Yeah, so I think the market demand remains strong. In fact, as we have grown over the last 2 quarters, we've also seen the industry growth rates peak up during this period. The demand footprint continues to stay strong, and we expect to continue to grow with that. However, one of the things that we continuously watch out for is the credit quality and the stress that might be building up in the market. So there is a need to balance growth with maintaining credit quality. And hence, we will calibrate our growth rates depending on what we see in the market from a credit performance standpoint.
You have been maintaining your profitability and growing it since 2022. Do you plan to continue to scale up your profitability metrics, and what really has led to this stellar growth?
Yeah, from a scale standpoint, I think we have crossed that threshold where operating costs start to become a drag on profitability. So going forward, we think that more operating leverage will kick in as we scale up. Our operating cost ratios will improve further from where we are today. The second key aspect that drives profitability is the credit performance, which so far has been good. And we will need to make sure that that continues to be in the acceptable zone. So really, from a business model standpoint, I think the profitability architecture of the company is proven. Now it's mostly down to execution elements.
Right. And what's driving the confidence that you will be able to achieve a twofold growth in the current fiscal year?
So I think we will maintain a healthy growth rate, whether it is 2x, whether it's slightly lower, slightly higher, as I mentioned, depends on what we see in the market as the credit environment. But the core enablers to these growth are really the distribution footprint that we have established through key partnerships, both amongst ecosystem players like an Amazon, a Flipkart, a Swiggy, a GPay, as well as through our own direct channels through Indifi.com. The second key element that we focused on is to build the management capacity to be able to grow the business. In that context, we have brought on board Sangram as the CEO of the company. He's handled businesses far larger in size. He's excited about the MSME unsecured category. And so that kind of gives us the management bandwidth to be able to grow. As we grow, we also want to make sure that we are offering different solutions that our customers are asking from us. So you will see more product diversification beyond the term loan and credit line lending business that we have currently. As we focus on the MSME segment, we are certainly seeing demand for more secured lending. We are seeing demand for more transaction-linked financing. So those are areas in which we will try and expand our product suite.
At a time when a lot of the peers in the industry as well are seeing pretty strong growth, there's strong credit quality, what will make you stand out among the lot?
MSME lending is a relatively massive market and massively underserved market. So I think there is enough space for everyone to grow. As a business strategy, we have taken an approach of focusing on segments that are unserved or underserved. So just by the choice of that segment, we don't see a lot of competition in that segment. However, as more and more players start to come in, there is a possibility that there is excess credit into some subsegments of the MSME population. That is something that we are watching out for.
Any plans then to go public, if you can address that in terms of a timeline that's been slated?
Not in a near term. We are still focused on growing the business, building a high quality business, and as I mentioned, building a diversified product portfolio in what we do. So right now the focus is all on growth. As you know, we had raised a round of private financing earlier this year, which gives us enough ammunition to go out and expand our business. So that is the single-minded focus that we are pursuing at this point.
So I understand down the line the focus is going to be on developing new products that really allows you to tap into the more undeserved segments of the MSME sector. Walk us through your plans.
Absolutely. So I think a lot of our product development, even so far, has been focused on what are the levers for expanding credit into underserved customers. Right? So, for example, we pioneered ecosystem-based lending, which means that we go and lend through platforms where MSMEs are already doing their business. And I mentioned some of the e-commerce and payment platforms earlier, which allow us to do that. Now, that mitigates the risk in lending and hence allows us to serve customers that would not get the classical unsecured business loan. Similarly, now we are looking at various kind of security collaterals that MSMEs can offer, whether it is the traditional collateral like property or gold, or categories that are developing like investments and thereabouts, right? So I think secured lending, as long as it remains frictionless, is another lever to expand credit access. Similarly, we see transaction-linked financing, where we are specifically financing for a particular transaction, purchase or sell transaction, as another risk-mitigated way of expanding access to small businesses. Now, in the large business space, invoice financing, channel financing are well understood. But when we go and offer this to micro and small businesses, we need to make sure that the product is simple enough and efficient enough from an operating cost standpoint to make sense. And those are really the problems that we are working on to bring credit access to more small businesses.
And do you have any fundraising plans on the anvil?
Not really. Our equity fundraise was just closed in June. ICICI Ventures joined our slate of investors. So we have enough capital right now to execute through to FY25. On the debt side, obviously, we continue to raise capital, on a weekly, monthly basis. And that availability of capital, has been favorable, just given the growth as well as the quality of the business that we have demonstrated.
Okay, good to have you on board. Thanks so much for joining in. Let's